Hey everybody, thanks so much for tuning into Young Money Investments. My name is Cameron Benyon, and today we are going to be talking about Solo and how I was able to make $3,560 this week shorting Solo. Alright guys, in today's video we are going to do a quick synopsis, a brief overview on what I saw in Solo and how I ended up able to make $3,560 on trading and shorting this company that shot up a whole bunch. Stay tuned. Alright guys, so today this was actually back on February 14th, so this was yesterday. I ended up shorting Solo, ticker symbol SOLO. As you can see, it was trading down here on Wednesday around $1.19, $1.30-ish a share, and then it actually ended up running up all the way up to $6.74 at the high. I mean, totally so overbought. I mean, it had been overbought for quite some time. Obviously, we're looking at RSI right here at about 90, and you would have thought, oh yeah, maybe that's the time that it will stop, and then it kept running up and up and up all the way up here, just a 600% return from its lows. This says 452%, but I don't know, it freaking ran up. That's for dang sure. So one of the things I did, and I can pull up my chart here on SOLO, or at least my average cost basis for it. So on Solo, I had a total of 4,000 shares. Average entry was 591 and ended up getting out at 502 right there before market close. So what that means is my average price on Solo was going to be somewhere right in this range, 592, which is actually a really good buy-in. I mean, really, in judging it towards the top, I really had a very good buy-in in Solo and ended up selling down here right at about 502-ish, which I think probably would have put me right in here, right towards the end of the day, getting some red candles and breaking through support. So some of the big things I look for in shorting a company like this is, obviously, I do not usually short right towards the end of the day. So a problem that you would have seen if you would have shorted Solo towards the end of the day is obviously that it continued to gap up after hours. I like to short morning gappers, companies that have a lot of volatility and gap up quite a bit during the pre-market hours. So again, this was going to be the day that I shorted it. I ended up, knowing, and I called this out in my stock group back here in the early hours, like back when this was starting to uptrend. I knew it was going to be a good positive short. I didn't know if it was going to stop here and then start to downtrend through yesterday. But what I saw here was that obviously on market open, it was very hard to get shares. It almost played to my advantage because during that I was able to get in right up here. Actually, my first entry, I had 1,200 shares. I had an average entry of 1,200 shares up here at 633. So I was 634 even. I was very high up, but I continued to buy, and ended up having an average cost basis of 592. One of the things that really played well to my advantage, and one of the things I would say you need to pay attention to, is when you are going to be shorting these highly volatile stocks, you need to draw support and resistance. You need to understand where these lines of support are, where the resistance is, because that is going to mean that is where you know where to cut. Like you have to have a set margin of risk tolerance, and if it breaks that, you have to be able to get out. Thing is easily someone could have gotten in right here at a RSI of 86 and said, dude, it's almost a 90 RSI, it's way overbought, it's got to be tanking from here, and they would have been right, like it should. But what happened was it consolidated, and then continued to gap up. And one of the things you need to do is be able to set a stop loss, a mental stop loss, where you will actually cut your losses and say, you know what, I couldn't get out. If you shorted in here and you let it run all the way up here 20%, you got to say, you know what, I got to get out. Because if you don't get out here, you're potentially looking at 100% loss And even if you were to have ridden it out and taken all the fees and everything, you know, you're getting out right in here, you're still getting out for a 50% loss on this trade, and that can be devastating for anybody's account. So really quickly, I hope that video was helpful. I hope that video was beneficial. I hope that video helped explain to you kind of my thought process on shorts, trading some of these, and averaging in. That's going to be one of the major keys as well, is average. Never take your full position in one specific trade, in one false swoop, because you never know. You think you're getting in where the RSI is really high, and you're not sometimes, and you need to actually continue to average or build into your position, but have a set support and resistance, so that if it does hit that resistance and it breaks it, you get out. You just got to say, hey, I'm going to wash my hands, I'm going to cut my losses, and I'm going to be done. So thanks so much for tuning into Young Money Investments. I hope y'all are doing well out there trading, and I'll talk to you in the next one. Bye.